So you're thinking of making a move to the greater Boise, Idaho area, but you have no idea what's happening right here in our real estate markets. Well, I'm glad you're here. Welcome to Mikey's monthly market updates for October of 2024. My name is Mike Petras with MPRE Residential, and in this video, we'll bring to you the latest insights and updates from real estate trends happening right here in the Treasure Valley. If you're looking to stay ahead of the curve in our ever-evolving market, or you are looking for informed information on whether to buy, sell, or invest in today's real estate markets, you come to the right place. So make sure to hit that subscribe button, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and let's get started. But before we do, if you'd like to begin your home search in a more real time than websites like Zillow, Realtor.com, and Trulia, please visit www.mpre.homes and sign up for your personalized home search today. If you are looking to sell and want an idea of what your home is worth in today's market, also visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. So let's get to the information and start off with Ada County like we normally do. And as we can see by this slide, the median home sold price on the county level dropped for the third straight month in a row, as anticipated. However, this month didn't drop by much. But why is the median home sold price dropping? We'll get to that in a second. But as we can see by this graph, we are sitting at a median home sold price of $534,900. In comparison, this is down 0.94% from January of 2022, down 11.18% since the peak home value of $602,250 in late May, early June of 2022, has made gains of 8.86% since the end of the market correction in January 2023, when we were sitting at $487,495. And this year, it's up 3.72% since the $514,975 we can see in the green. So overall, the real estate markets in Ada County have been chipping away at the losses incurred during the market correction. Since last month, the median home sold price has only lost $100 in value. Negligible really, but overall has been on the downward trend since June. Why is it dropping though? It's because of supply and demand, the key factor in real estate, much like how everything else is valued. Looking at the inventory versus buyer's demand, inventory is still on the rise, sitting at 1,751 homes available for sale, with only 714 selling in the month of September, placing Ada County at 2.45 months worth of inventory. But what about the buyer's demand? As we can see by the pending line, it's flattening, a move from last month when the buyer's demand was actually gaining some steam. But why is that? For more information on this, and the best strategies on how to succeed in buying, selling, or investing right here in the Treasure Valley, you'll have to stick around to the end of the video where we'll discuss just that. So if the inventory is on the rise, which category is adding the most to the overall total single-family homes? Breaking it down, we can see that existing homes have 1,004 homes available for sale, with only 472 selling in the month of September, placing us at 2.12 months worth of inventory. And looking at new construction, the same trend has been occurring since January of 2023. With 747 homes available for sale and only 242 selling. Overall inventory has been on the way up, and buyers' demand has been on the way down over the last few months. This is why the median home sold price has been dropping, as anticipated in previous Mikey's monthly market updates. This is because sellers have been losing most of their edge to attract buyers. More competition in the market means price reductions, which have been occurring throughout the Treasure Valley. And this is reflected in the median home sold price for both existing homes and new construction. Although the signs are showing an overall continued price reduction on a county level, this month in existing homes, we can see that the median home sold price rose to $537,000. This is up 2.23% since last month. However, existing homes has sort of been bucking the odds. Since the end of the market correction in January of 2023, existing home median home sold price has gained 11.54%. Wow. And since January of 2022 has gained 4.07%. However, since the beginning of the market correction, back in late May, early June of 2022, it is still down 8.47%. What about new construction? New construction has taken a loss since last month. In fact, since really the beginning of the year, new construction is basically flatlined. This month, new construction fell 4.77%, which is still significantly down from the 588,945 in January of 2022, 11.09% down to be specific, but down 24.11% since the top of the market in orange. But it is slowly chipping away from the market correction low of 494,900 at a rate of 5.48% in gains since that mark. How about the health of the real estate markets in Ada County? Well, that's determined by two things, the days on market and the cancels and expireds. Looking at the days on market, we have been on the rise for the second straight month in a row. It's expected for this time of year, leading into slow season, which is quarter 4 to quarter 1. We can see that we hit 40 days on market for the average sale. The key to watch out here for is the level of days on market. For example, when the days on market hit high levels like we saw in January of 2023, this means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. When the days on market crash down low, we can anticipate the opposite, sellers having a massive advantage over the buyers, which they also did. But looking at today's trends and back to 2019, we can see that we're basically at a balance. So have the markets returned to normal in Ada County? How about cancels and expireds? For the third straight month in a row, cancels have been on the rise. While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels, however, are generally more of the trend that we should look at. A rise in cancels can mean a few things. It can mean that sellers are getting cold feet and pulling their homes off the market. It can mean that buyers are not getting the interest rate that they were looking for and fell out of contract, which led to a subsequent cancellation. Or in this case, again, it's probably because of seasonal swings. Sellers know, just like real estate agents, that the markets cool down in quarter 4. The holidays are also right around the corner and the kids have gone back to school. So what can we expect? The number to rise. Overall, however, by the days on market and the cancels and expireds, the overall health of the real estate markets in Ada County is looking okay. Nothing super alarming seems to be showing in the data. All right, Canyon County, it's your turn. And as we can see by this slide, the median home sold price on a county level has rose, not anticipated, and appears to be more like a one-off fluke, something to keep our eye on. As we can see by this graph, we are sitting at a median home sold price of $423,896. In comparison, that's basically negligible to January of 2022, but it is down 11.03% since the peak home value of $476,500 in late May, early June of 2022, and for the second straight month has made gains, up now 6.71% since the end of the market correction in January of 2023, when we were sitting at $395,445. So overall, the real estate markets in Canyon County has also been chipping away at the losses incurred during the market correction. Since last month, the median home sold price again is up 2.08% to be exact, but as we can see over the course of the year, it has been up and down. This will continue to be the trend to monitor. Again, why is this though? It's because of supply and demand, the key factor in how real estate, much like everything else, is valued. Looking at inventory versus buyer's demand, inventory is still on the rise, sitting at 1,129 homes available for sale, with only 422 selling in the month of August, placing Canyon County at 2.67 months worth of inventory. But what about the buyer's demand? As we can see by the pending line in orange, the buyer's demand gain from last month, fizzled out. But why is that? Well, for more information on this and the best strategies on how to succeed in buying, selling, or investing right here in the Treasure Valley, stick around to the end of this video where we'll discuss just that. So if inventory is on the rise, which category is adding to the most overall total single-family homes? Breaking it down, we can see that inventory in existing homes is slightly up, with 564 homes currently available for sale and only 244 selling in the month of August, placing us at 2.67 months worth of inventory, along with the buyer's demand also looking like it's going to continue to decline. While existing homes show some items to monitor, new construction is getting interesting. Looking at new construction, inventory may show a glimmer of stopping. Have the builders realized that they've overbuilt? Currently, there are 565 homes available for sale, with 178 selling in September. And as we can see, the buyer's demand is still slipping. Overall, new construction has been adding, in my opinion, the most overall inventory to the single-family home picture. This is good news for buyers looking for new construction in Canyon County. This is also most likely why we have been seeing the up and down bounce in the median home overall sold price. With inventory rising above levels seen when the market correction took hold in late May, early June of 2022, we can anticipate the median home sold price to continue to come down in Canyon County in new construction, unless it takes a consistent turn. So stay tuned and hit the subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come up with. We will also be solidifying the best strategies for buyers, sellers, and investors later on in this video. So stick around. But back to the data. Is the proof in the pudding with price reductions? Yes, it is. By this graph, we can see that the median home sold price dropped for the third straight month in a row to $390,000 for existing homes. This is down 2.19% since last month. Since the beginning of the market correction, back in late May, early June of 2022, existing homes are still down decently, 8.23% to be exact. But since the end of the market correction in January of 2023, existing home median home sold price has gained 13.07%. Existing homes in Canyon overall have been making significant gains. Since January of 2022, the existing home markets are back to negligible. So why better results in Canyon than in Ada? In my humble opinion, it's because of affordability. Existing homes in Canyon County are obviously more affordable than they are in Ada, which has attracted the buyers. And considering where mortgage interest rates were for the majority of the year and prior, this makes sense. What about new construction? New construction made some pretty significant gains this month too, but again, I feel like it's a one-off fluke. A fluke that will correct itself next month. Since last month's $424,900, the median home sold price significantly rose to $452,490. That's a rise by 6.09%. Wow. However, new construction is still down from the $465,000 in January of 2022, 2.69% to be specific, and even further down since the market correction in orange by 17.57%. How about when the market correction stopped in April of 2023? Gains for sure, but significant? Last month I wouldn't go there, but now I just may. Up 10.30%. So if you're looking for the best value, is new construction or existing homes it in Canyon County? Stick around to the end of this video where we'll go ahead and discuss just that. How about the health of the real estate market in Canyon County? Well, that's really again determined by two things: the days on market and the cancels and expireds. Looking at the days on market, we again have been on the rise, and it's expected for this time of season, leading into the slow part of the year, quarter 4 to quarter 1 for real estate. According to the data, we could see that we hit 50 days on market for the average sale. Again, what we are looking for in these trends are the days when the market hit high levels like we did in January of 2023. This means that the seller's market is struggling. When this happens, we can anticipate prices to come barreling down, which they did. When they crash down to low days on market, we can anticipate the opposite, sellers having massive advantage over buyers, which they also did. But looking at today's trends and back to 2019, we can see that we're basically at a balance. So have our markets returned to normal in Canyon County? How about the cancels and expireds? For the second straight month in a row, cancels have been on a lowering trend. While expireds are generally those holdout sellers that want their price and refuse a price reduction until the end of their contract, cancels, however, are generally more the trend that we should be looking at. The lowering of the cancels in this case most likely means that the homes that are available on the market are actually selling, and this would make sense considering the lower mortgage interest rates and generally cheaper homes you can find in Canyon County. This is not a good sign for buyers in Canyon County, but leading into the holiday season, we'll have to monitor this data for any increases or continuing declines to the cancels. Overall, however, by the days on market and the cancels and expireds, the overall health of Canyon County is looking okay. All right, you made it this far in the video. Awesome. Of course, if you have any further questions, please feel free to reach out to me. I'm more than happy to answer. And again, I'm a no-pressure real estate agent, so a phone call won't lead to spam calls or emails from me. However, if you like what you see so far and want to stay in tune with the Treasure Valley or greater Boise, Idaho area real estate markets, please hit that subscribe button, hit the notification bell so that you're constantly in tune with this information, and welcome to my channel. Also, if you're looking for a more in-depth overview on what the cities have to offer here in the Treasure Valley, please click on the link below and download my free relocation guide. That way you're in the know before you decide to make the move. So now let's move on to the best strategies if you're looking to buy, sell, or invest right here in the Treasure Valley. What is the data showing us, and is this a good time to make any moves? No pun intended. Buyers, let's start with you. The key again to value is supply and demand. As we saw by the data, supply is on the rise in both existing and new construction, while the buyer's demand is on the decline overall. But are the inventory brakes being put on? They very well could be, especially as we lead into slow season, which historically is quarter 4 to quarter 1. Also, pair this with an increase in mortgage applications on a national scale, buyers are returning to the markets. This was predicted by me in prior videos, all in relation to the first federal funds rate cut. This jump in mortgage applications is something to not be ignored. You've heard it here first. Although the federal funds rate does not control mortgage interest rates directly, the first cut to the federal funds rate was baked into mortgage interest rates before the Fed actually did it. And subsequently, this brought out buyers. According to this graph, the Fed is anticipated to make 2 more by the end of this year. This is also good news for mortgage interest rates as we've seen them continue to come down as a result. At the time of making this video, the election is also less than 30 days away. This is what you should really look out for. While financing the markets tend not to be at the top of everyone's priority list, one thing is, and that is the presidential election. People place their hopes and dreams behind their candidate. In my opinion, one candidate brings prosperity where the other brings more of the same. Should one candidate return, oh boy, hold on to your seat. The real estate markets could heat up faster than a nuclear blast. Confidence in the markets will most definitely return. In my humble opinion, buyers will return in greater force after the presidential election. It should also be noted that historically, real estate cools during presidential cycles. Should buyers return in greater numbers, this will soak up inventory, resulting in the buyer's edge to fade. But Mike, I thought the sellers had an edge. Well, according to Alta's research, some areas do. But when existing and new construction homes have high days on market, meaning they're having a hard time pushing their inventory, proverbial fingers can be bent for concessions towards buying down your interest rate, which some are offering 2-1 buy downs on select homes with new construction, closing costs, buyers' professional representation concessions, and more. Some of the builders have actually began to stop advertising concessions like they did before, yet have slashed their home prices. In my opinion, this is a smart move to prep for the results of the election. For more information on this, please feel free to reach out to me. So after the election, if one returns to the White House, business will most definitely pick up. And again, as we can see by the mortgage applications graph, it already has. You may not want to miss out on the boat. I do anticipate a hotter than usual Q4 to Q1 in the Treasure Valley real estate markets. And now, while you might be saying, time to rush off to a builder or seller, pump the brakes. Remember that working with the builder or seller directly has a huge disadvantage, and that is the seller's agents and builder's agents work for who? That's right, the builder, seller. While all these things might entice you directly to work with them, an experienced agent like myself represents you and your best interests versus the seller. So whether it be me, my team, or another agent you find on YouTube, always hire an independent agent to represent you and your best interests versus the builder seller. Do not fill out anything with a builder until you have considered independent professional representation thoroughly. You could place your real estate agent in a rough spot otherwise. Furthermore, and speaking of builders, and since the market correction, they've also taken the biggest hit in the overall median home sold price. So again, with or without concessions, a new home is still your better deal, at least in my opinion. Plus, you're getting a new home that has an edge in itself. But again, don't discount existing homes. The same trends exist. A significant gap between supply and demand, and home prices have been coming down due to such. Given this, smart sellers, in order to compete with the builders, should be offering concessions, or at least have thoughts of them should they arise in a buyer's offer. The reality is, though, is that not a lot of sellers are offering concessions like the builders would, or can or will be transparent about them. Even some sellers, due to the NAR settlement, are also refusing to contribute a co-op offering to the buyer's broker. This means that you, the buyer, could be on the hook for the cost of professional representation to your agent. This also depends on the negotiations you made with your agent at the buyer's representation agreement meeting. Some builders, on the other hand, have already made it known to local agents that they will offer a buyer's co-op for professional representation. So it can be a gamble in the existing home market as compared to the builders, who seem to have pre-circumvented the new DOJ commission transparency rules. A smart business move, if you ask me. As to where, unfortunately now, existing home sellers have their hands tied due to the DOJ. Unfair if you ask me, but hey, it's the way things are now. Also, with the price drops existing homeowners are now taking due to the current market conditions, they are generally more apt to be tougher in negotiations and concessions, or even further price negotiations. Hence the overall rise in the expires that we have been seeing. This is also where an experienced agent like myself comes into play, knowing the pain points of the seller in order to obtain wins for my buyers. So thinking of working directly with the seller to bypass all of this? It's a thought, but again, remember, this is what real estate agents do. Represent you to win. Saving money on a buyer's agent commission in lieu of professional representation can have its serious consequences when it comes to purchase price, concessions, repairs, appraisal negotiations, and so much more. Call me today to find out more. Remember, the seller wants what's best for the seller. Even dual representation by an agent, where they represent both the buyer and the seller, has limitations by playing a neutral role between both parties. Having sole representation in your corner, in my eyes, is critical to win. In summary, though, expect home prices to come down a bit more, also anticipate mortgage interest rates to continue to lower, anticipate a hotter than usual Q4 to Q1 as buyers re-enter the markets, and anticipate more buyers to come out of the woodworks should one return to the White House. Also anticipate inventory to lower as a part of the seasonal swings for both builders and existing home sellers. If inventory gets swallowed up as buyers' demand increases, your edge as a buyer may go away. If you are looking to make a move within or are looking to relocate from out of state, please feel free to reach out to me. I'm happy to help. And if you want to begin your home search today and search in more real time than websites like Zillow, Realtor.com, or Trulia, please visit my website at www.mpre.homes and sign up for your personalized home search today. Also, download your free relocation guide. This can be found via the link in the description below. I look forward to hearing from you. All right, sellers, it's your turn. While the last several months have not been the most advantageous for you, considering the rise in competition, inventory, loss in home value, and the buyers disappearing, this all looks to be turning around. Just take a look at the mortgage applications. Boom! Way up, and we haven't even seen the results of the election yet. And why have the buyers returned? Well, you guessed it, because of the mortgage interest rates. This should mean a hotter than usual Q4 to Q1 for the Treasure Valley real estate markets. Also, if one should return to the White House, expect even more buyers to return. So if you took your home off the market and you really wish to move for whatever reason, you may want to reconsider your selling position. If you pay attention to the markets like I do, we have all had an inkling that the national economic data has been more or less distorted for the last 2 years, especially when it comes to unemployment. Regardless of where unemployment may be currently, the cracks in those data numbers have showed themselves. We saw this by the stock market reaction to unemployment ticking up 0.2% in one of those reports. In my honest opinion, this should give ample time response to the problem, should one return to the White House. While the problem won't fix itself right away, should a recession hit, consumer confidence in the markets will return almost assuredly. And as long as the unemployment doesn't get out of control due to the Fed's monetary policies, which it could, buyers will come out of the woodworks. This is great news for you. Also, we should expect to see inventory come down as per seasonal trends, meaning less competition. As long as the gap narrows between supply and demand, we should see a stop to your equity bleeding. If you want to maximize the value you can get from your home, selling now as compared to later seems to be the right move amidst all of the uncertainty, and a move that is evident by current inventory levels. As buyers pick up because of lowered mortgage interest rates, this shows an advantageous period. If you agree with me and would like to know more about what your home may be worth in today's market, please visit my website, click on the Home Evaluation tab in the upper right-hand corner, and obtain it. You most likely will hear from me, but again, I pride myself on being a no-pressure real estate agent. If at all, I would simply like to give you a call, introduce myself, see how it is I can be of service, and be able to help when you're ready. I can also set you up with monthly market reports, keeping you in tune to what is happening in your local area. If you are ready and would like to know how we can sell your home in the quickest time possible and for the most money in today's market, please feel free to reach out to me. I'd love to set up a 30-minute appointment with you where we can discuss just that. Let's get you to your next destination. I look forward to hearing from you. All right, investors, it's your turn. And the first thing that comes to mind is uncertainty. And you'd be right. There is uncertainty. For example, what's happening with unemployment in the U.S.? Has the Fed held on too long? Who's going to take office? What about the stock market and PE ratios? All valid questions. But what happened not so long ago? A quick stock market crash that has since recovered. This showed cracks in the U.S. economy. What this did was telegraph to the Fed and the next administration problems that need to be addressed. In response, the Fed has already lowered the federal funds rate once, and per predictions, should the rest of the year, and even leading into 2025. Also, if a particular candidate returns to the White House, American independent energy will return, as well as manufacturing jobs to the U.S., etc. While relief may not be immediate, it will come. This should help stave off any large impact caused by a recession. Reverting back to PE ratios, there is no question, though, that the stock market is also overvalued. However, will there be a large stock market crash? Or could a correction occur? Should unrealized capital gains and a raise in capital gains tax see the light of day, a crash could become super relevant. But for now, they are not a part of the everyday U.S. tax structure. Please keep this in mind at the ballot box in November. Has the stock market survived corrections before? They have. It happened in 1987, 1998, 2000, 2020, and even, believe it or not, in 2008. Some recoveries just prolonged longer than others. Now, while I can't predict the results of a possible upcoming correction or its longevity, or even if one will hit, real estate is always a great investment during these cycles. But how? It's because real estate provides a tangible asset with an intrinsic value, offering stability compared to the volatility of stocks. Owning investment properties can also generate a steady rental income, providing financial stability and diversification away from the stock market. Historically, real estate appreciates over the long term and can act as a hedge against inflation, as we can see by this graph. Investors also can leverage real estate to enhance returns, benefit from tax reductions, and take advantage of consistent housing demand. And additionally, real estate often has a lower correlation with stock market performance, which can help mitigate the overall investment risk. But the greatest advantage is that people always need housing, even under recessionary times. The only drawback would be if unemployment reaches astronomical levels, which I do not personally anticipate, and I mean to the point where Americans couldn't even afford a rental. If unemployment were to do so, however, this would open the door for institutional investors, much like it did in 2009. But don't bank on that. There are little to no subprime mortgages in circulation, and American homeowners have equity. There are arms out there, but not at the amounts like we saw in 2007. Even if either situation created havoc, institutional investors would give you a run for your money. They have more of it, unfortunately, to the tune of $22 trillion. But let's look at it today currently. The mentioned real estate advantages applied. And in a market that is seeing almost 3.74% growth in equity since the beginning of 2024 in ADA, 8.86 since 2023, and 5.63% in Canyon 2024, 6.71% since 2023, real estate could be a good place to park your money to mitigate the risk of a possible stock market correction, especially if you're in it for the long term and you can make residual income. So if you'd like to know more about the capitalization rates you can obtain on a property here in the Treasure Valley, please feel free to reach out to me. I'm more than happy to discuss a potential investment property with you. All right, renters, and don't think I forgot about you. I always include you in every single Mikey's Monthly Market Update. It's your turn. As we know, you always pay 100% mortgage interest rate to your landlord. You're the one fitting the bills for their equity. And right now, things are looking relatively good to go ahead and get into that purchase. Mortgage interest rates may have kept you down because they got too high, or maybe even the purchase price. But right now, purchase prices have come down, so have mortgage interest rates. So I want to go ahead and invite you to go ahead and revert back to the buyers section, which is going to go ahead and be labeled out here on YouTube, and watch that and see the most advantageous things that you can do to go ahead and succeed in today's market. And of course, if you're looking for a qualified loan officer to be able to get you to start setting the foundation today towards home ownership, please feel free to reach out to me. More than happy to put you in contact with one of them. Renters, I look forward to hearing from you. Well, thanks again very much, everybody, for taking the time out of your day to watch this video. Of course, if you have any further questions, please feel free to reach out to me. You can see my contact information below, and it's also in the description. Also, if you want to stay in tune with these videos as I do come up with them, if you're looking to monitor the markets right here before you decide to make a move, please click on the subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come up with. And also, please click in the description below, download my free relocation guide if you're looking to make a move into the Treasure Valley from out of state. And again, thank you very much for taking the time out of your day to watch this video. Before you go, please give me a thumbs up if you really did enjoy this content. Also, feel free to share this information with somebody else should you know that they could find it useful. And I look forward to the day that we speak. Thank you very much. God bless. And I look forward to the day that I call you my neighbor.